Let's move on to AECI. That one is based out in Modderfontein, head office. Some people know it as African Explosives, but it's got more to the business. In fact, the specialty chemicals business is a little bit larger, and it's got operations of those all over the show, including in Indonesia and the United States. It is focused on the mining and manufacturing sectors, though, you could say. But once you start looking at the chemicals business, it's got all sorts of things going on. 13.8 billion rands worth of market cap. Price to earnings ratio 13.93, dividend yield 3.82. I mean, it's a well-run operation, but the customers, like the mining sector has been somewhat muted.
Yes, and not all mining customers are the same. You have deep-level mining,
Yes.
gold and platinum. You have more surface mining, the likes of
That's
iron ore.
explosives, the high explosive stuff, the igniters or the, what are they
Yes,
called, detonators.
Correct, and you get electronic
Surface
detonators and shock tube detonators, so it can get quite complex.
And then in the mining business, they also sell the specialty chemicals
Yes.
that get used, say, in the platinum industry to float the stuff out in the refining process.
Indeed, so they're integrally involved in the mining sector. Obviously, the low prices of a lot of metals and other commodities, ores, have not been great for them. But at least these mines, to a large extent, haven't shut down. So the prices are lower, but the mines are still producing. And that means that their supply into those mines and the demand for those products has been more stable. So one might have expected a year ago that they would have impacted more negatively. They weren't impacted too negatively, and they're quite well positioned.
And labour is a bit more contained on those operations.
Yes.
While we talk about, let's see the share chart. I mean, the other thing that has happened is that the prior year comparisons here are tricky because they sold pretty much all of their property
Correct.
in the 2014-2015 period. And then things looked quite bad, but now those are starting to kind of leach out of the numbers.
Yes, quite often the way a lot of analysts look at a company, they look at long-term returns on equity, and sometimes if you had a very asset-intensive type part of the business being property, you don't see that in the historical figures, and it depresses your ROEs. And only now in the last 2 years have you really seen how the underlying operations have done, excluding the property which sat on the balance sheet, but you didn't see a big earnings contribution.
Because the property, for those watching at home, in the old days when you made explosives, you had to put a big lot of land around your factory because, you might blow the place up. But then as they started outsourcing and getting better, that land, excess land around the Modderfontein plant was available for residential and other development. So that was a value unlock.
Yes, and they sell that to a Chinese consortium. It'll be interesting to see if that becomes a new node in Gauteng. Could be one day. But for now, the focus is on the chemicals and the explosive operations. They seem to be performing quite well. I mentioned that the mines at least are keeping the type of demand there for their products. And that means that it's been relatively stable and a higher ROE business after they sold the properties. So not bad at all.
And a good management team. Mark Dietor and his colleagues, he's a young, dynamic guy, came to the helm a couple of years ago. He's been well regarded, seems to be doing a good job. Operational excellence has been underpinned. They've done a lot of work on lowering costs inside of all of the businesses, trimming out bits that have not done well. So one's got to be fairly positive about them, but. What about the future? I mean, it really comes down to whether or not you're positive about the mining industry in this country and in some of the other regions that they supply.
Yes, and of all the companies
outlook.
we're looking at in this episode, this one has the most exposure to mining specifically. So I'm a bit more cautious on them. I still think, once again, we're going to get the stuff out of the ground. It might be less dollars per pound or kilogram that the mines earn, but they still need to use as much chemicals to get it out. So more defensive than the mines, but still I don't think that their industry, their customers are in a growth phase, so that mutes the revenue growth for AECI.
Although the board did pass a 15% dividend hike in the recent results, which is a sign when the company puts a dividend out, which is a little bit higher than the earnings growth, that signals that they are fairly confident about the future.
Yes.
Okay, but we're going to say edge, not hot.
I think it's trading near fair value, so because of that, not hot.
Okay, we'll go not hot on that one.